Coming up on the Suze Orman Show.
Why doing things to save taxes today might just hurt you in the future. Also,
I've spent most of my life just not paying attention to any of my finances, just going through life with blinders on.
Belinda, you are living a lifestyle that you cannot afford. And you ask me, can I afford it?
I want to get liposuction on my stomach.
Me too. I've always wanted on my thighs. Maybe I want it on my thighs. Hi everybody, I'm Suze Orman and you are watching the Suze Orman Show. Tonight, I want to talk to all of you about taxes. I know it's just a few days away and you're getting nervous. Are you going to get a refund? Are you going to owe money? What are you going to do? And you're just like doing anything you can to avoid having to deal with this, but the day is essentially here. But here's what concerns me. Because many of you haven't saved up to pay the right amount of taxes, or you don't have the amount of money needed as to what you owe, you do everything you possibly can to save taxes today without thinking, is it a wise thing to really do for your future? What am I talking about? You will do a traditional IRA over a Roth IRA because why? It saves you tax money right now, even though in the long run, you might be better off having done a Roth IRA where you pay taxes on that money now, and now that money is allowed to grow tax-free. So in the end, when you do retire and you need it, you don't have to pay any taxes on it. So many things that you do to save taxes now, and when you look into your financial future, when it comes to taxes, I'm here to tell you, you are making big mistakes. So as the tax deadline approaches, I don't want you to look at your situation as, what can I do now to save taxes now? I want you to look into the future and really kind of figure out, does it make sense for me to pay it now or pay it then? Let me just give you a few examples. A lot of you keep investing in annuities. Some financial advisor tells you, you can save a lot of money, put money in this annuity. While it's in there, it will grow tax deferred. You don't have to pay money on it while it's growing. But when you take it out, you will pay ordinary income tax on it. What does that mean? That means whatever your income tax bracket is, that's what you are going to pay. Don't you think you would be better off taking money, just investing it in an investment account? While it's there, it gets to grow for you. You're not paying any taxes on it if you are not selling it. And when you do go to sell it, you just pay capital gains tax, which is really a fraction of what most of your ordinary income taxes are. Please be careful here. Right now, if you have the ability to do a Roth 401k versus a traditional 401k, take it. If you have the ability to do a Roth IRA versus a traditional IRA, take it. If you have the ability to have even extra money and invest it, do it in an investment account and not in an annuity, a variable annuity. Stay away. Look into the future rather than right now, and I promise you, you'll be really happy that you did. Let's go to Marie in Texas. Ask me a question.
Hi there. Thanks, Susie. I am curious. I have some IRS debt that I just pretty much figured out, and I also of $25,000 to $30,000. And we are in the process of negotiating what that payment's going to be next week. I also have $25,000 in credit card debt. It has been suggested by my accountant that I take my 401k and liquidate it, which is $36,000, to pay off this IRS debt. That was talked about. That is very scary to me. Do not own a home. That's about the only thing I feel like I have that I have some pride in.
Let me ask you just a little bit, just a few questions.
Sure.
Do you have any liquid savings at all?
No. Not more than a couple $1,000.
All right, so you have $2,000 to your name. The only other thing that you have to your name is about $36,000 or so in a 401k, correct?
Yes.
We don't have any other money. And this brilliant accountant is telling you to take money, withdraw it? Is he telling you to take a loan? How does he expect you to get it out of the 401k?
No, because like he's telling me, I guess I would have to liquidate it, because to pay, like close it and take it all out, because to pay the IRS, they
And
would
are
take a
you
big
still,
chunk.
listen to me, are you still working for the company that this 401k is in? You are,
Yes.
right?
Yes, yes.
Does your accountant have a brain anywhere
No.
in his body? You should get another accountant. I mean, part of me probably thinks that you have this $25,000 or $30,000 of credit card debt because this same accountant probably made a mistake on your returns that have now resulted in this. Is that possibly true?
Yes, because it's business. I was keeping my business afloat with
And
that.
why in the world would you be using an accountant who didn't do it correctly to begin with, who literally is telling you to do something you cannot do? Listen to me closely. When you work for a company, you have $36,000 in a 401k. You can take out a loan from this 401k and then pay it back over a 5-year period of time, but you cannot withdraw more than 50%, or in this case, $18,000 as a loan. That's number one. You cannot just close it and withdraw everything because that's a hardship withdrawal, and they're not going to allow you to do that. So your accountant does not have a clue what he is talking about. Also, doesn't it kind of interest you that any money that you have in a 401k is protected against bankruptcy? Let's just say you had to claim bankruptcy on this $25,000 of debt. You can also, believe it or not, if you do certain things, claim bankruptcy on IRS debt as well. And you could all do that. You don't have a house, you have nothing else, and protect the $36,000 that you have where? In your 401k. But no, he wants you to do something you're not even allowed to do. Here's the bottom line. You're not going to touch your 401k. You're going to deal with the IRS the way you should deal with the IRS. You're going to have to think about how you start dealing with your credit card debt, and you can work all of that out. But here's the real thing you're going to do. You're going to go and kick that accountant out of your life and make it such a hard kick that he just goes wherever he needs to, but hopefully he won't be able to be anybody else's accountant because he is really bad. Close down a 401k where you work. This is what a licensed accountant is telling them. Really, sir? Really? Unbelievable. We are going to California. Elizabeth, do I need to know
Hi.
something here? What do you need to know?
Well, I've pretty much maxed out 3 credit cards with an interest rate of like between 15 and 23%. And I kind of opened a 4th and a 5th one in a bit of a panic before my brother's wedding because I thought I would kind of need them, and I did. I only used the 4th one, though, and the 5th one has a really high limit, like an $8,000 limit, but a $450 fee. And it was kind of tempting to keep that, and I was wondering if I should keep it in case, what if I have like an emergency or something like that? But the fee is super high. The annual fee is really, really high. And so I like knowing that I have that amount of money for emergency.
Whoa. We need to talk, you and me. We need to have a really deep, honest talk between the two of us. You have now told me the interest rates that you have. You did not tell me how much money you owe. How much money do you owe on all your credit cards together? Just all your credit cards.
Roughly like $7,300.
$7,300. Now, the 4th and the 5th one that you opened up, you opened that up because of your brother's wedding? Because why? You needed to give him money to be married? You needed to get him a gift? What did your brother have to do with the fact that you needed a credit card?
Nothing personally. It was so that I could make sure I covered hotel and travel costs for myself and my mom.
And so do you not find that you are living in a situation that you cannot afford to live the lifestyle that you are living unless you have credit cards that you can put it on and just pay the minimum payment due? So you are living a financial lie, correct?
Yeah, a little bit.
Not a little bit, a lot. And I can tell you, $7,300 will turn into $15,000, will turn into $30,000. if you keep doing this, because at these types of interest rates and fees with paying just the minimum payment due, your balance is probably growing rather than shrinking, or it's going to take you forever. How old are you?
28.
28. Girlfriend, you don't want to be 38 and 48 and still try to figure out which credit card can I open? I'll pay this big monthly fee. I'll pay $450. No. You have got to stand in your truth right now. Close down the credit card that was your fifth one, that was at that $450 fee to open it and a high annual fee. Close it down. You are not to be paying any annual fees for any of your credit cards. And if I were you, you should listen to me. I would cut up every single credit card that I had, and I would not be putting a penny on a credit card, and either you live with the money you have or you don't do it. And it is that simple. Got it?
All of the years of being irresponsible and emotionally spending had finally caught up with me.
You don't even have the money to take care of yourself if you get really sick and you don't have money coming in. Belinda, you are on the street. And later, can I afford it, Junior?
They want to buy a used bass clarinet for $385.
You make $100 a month. You are 12 years old, but you hardly have any money in liquid or stock investments, do you?
No, I like to spend a lot.
Welcome back, everybody, to a mess of a financial situation for my one-on-one tonight. Belinda is here with me from Dallas, Texas. She's 46 years old and a graphic designer. She's single and in a relationship. Her partner just moved in with her. Belinda's money tells the tale. She has nothing in retirement, less than $1,000 in an emergency fund. She has a little equity in her home, but she has $60,000 of consumer debt. She is spending what she makes every month, and she makes a good living, over $120,000 a year before taxes. But her credit cards are in collection, she's behind in her mortgage, and behind in her student loans. And to keep them out of default, Belinda hit a pawn shop and is paying over 100% interest on that money. First of all, Belinda, welcome to the Suze Orman Show. You know, when I look at something like this, the very first question that I want to ask you is, what was the turning point that had you call into the show?
Well, I had basically have hit my financial low, and it's actually one of the low points of my life. When I found out that I was about to default on my student loan, it just hit me. And all of the years of being irresponsible and emotionally spending had finally caught up with me. And I thought, I cannot believe I'm about to default on these loans that really should have been paid off already. But in typical Belinda fashion, I didn't want to deal with them at the time, so I would get deferments, and then when they wouldn't give me deferments anymore, I would get forbearances. And finally, after years of doing this, they said, no more forbearances for you, you really have to pay this back. And, you know, I've spent most of my life just not paying attention to any of my finances, just going through life with blinders on. And so when I found out that I was at that point in my life and I had to go take out a title loan to keep from defaulting, it made me get to the point where I hit rock bottom, which is where I need to be right now, to ask for help and to realize that I have to figure out what I have to do to fix this.
Yeah. Well, the good news is at least you have an income so that we can fix it. So many times people come on the Suze Orman Show and they have the exact same problems, but they don't have anywhere near the income that you have. So that's a good thing that we have going on here. If you were to look back on your life and you see everything that you've done, and now you see what you have created, the true financial chaotic mess that you have created. You don't have a penny to your name. You're behind on everything. Everybody wants something from you and you have very little to give. Give me some words as to how you really feel being in the situation that you're in.
How I feel being in this situation? I feel like a failure. I'm embarrassed.
Embarrassed? Keep going.
I'm angry at myself.
Yep.
I'm disappointed. I think the biggest thing is I'm just embarrassed. I just can't believe that I'm here.
All right, so your main thing is you are embarrassed.
Yes.
And as you've probably heard me say on the Suze Orman Show, that embarrassed or shame, it's the same thing, is the main internal obstacle to wealth. When we feel ashamed of something, we turn away from money, we don't want to look at it, but then there comes a point where, all right, let's face it to erase it, and that's where you are. One of the reasons in your writing to me, because you originally wrote in when you were doing this, you said the following. You said, when you are restricted or restrained, you feel sad. And that is why every time you went to make a budget or every time you had to restrict yourself, you decided not to because you didn't want to feel sad. So here's my question to you. Would you rather feel sad or would you rather feel embarrassed, angry, disappointed? Which one of those emotions would you rather feel if you had to feel one?
Oh, I would rather just feel sad.
All right, then remember that you said that because you are going to have to restrict. You are going to have to be restrained. You are going to have to make choices that those choices are going to make you sad. You said it in your paperwork. But I rather you feel sad than to feel angry, embarrassed, disappointed, all internal obstacles to wealth. So Belinda, you're here with me now. We need to give you an action plan. I need to give you an action plan so that you can be very clear on what you need to do at this point. Now, I need you, before I give this to you, I want you to agree that you really are going to do everything that I am asking you to do. Are we in agreement?
Yes.
Because you know, I will find out. And don't be surprised if I don't come there one day and say, what the heck were you thinking? Belinda, you are living a lifestyle that you cannot afford. There is nothing going into savings, but there are things that you are doing that makes no sense. You spend $151 a month on your garden. You don't have $151 a month to spend on your garden. I need green in your bank account, not green in the dirt. Cut out the garden. I need you to cut cable, fast foods, pets, entertainment, and I'll come back to pets in a second, extra gifts and credit card debt. You currently are paying $232 a month on a credit card at 31% interest. Are you kidding me? That is highway robbery. That is a credit card that doesn't deserve to be paid back, to tell you the truth. They could have made a deal with you, 0% interest rate, then maybe I'd say, okay. But you have got to make every penny work. Let's talk about your pets for a second. You are spending one of your largest monthly expenses are $313 for your pets. If your pets got really sick, if something happened, you don't have the money to take care of them. You don't even have the money to take care of yourself if you get really sick and you don't have money coming in. Belinda, you are on the street. You are on the street. You're living in a car. Well, maybe you're not even living in your car because there's a lien on your car. You have no place to go or anything to do. So this is serious. And I know I'm going to get all these emails saying, Suze, she should keep her pets. I get that. I love pets, but I love you more. And I am sure you can find a loving home with a friend that will keep your pets that you can visit. Maybe if you start making more money or you have more money, you'll be able to take the pets back. But we need to make cuts. That will give you $1,500 a month extra. Now we're in a situation where you owe the IRS $14,000. You're also going to be getting a tax refund of $8,000. The IRS will take that money, and you now will owe the IRS $6,000. They will set up a payment plan for you. That needs to go on automatic payment. But next, and this is what's going to be really hard for you, I think you need to sell your home. And you need to sell your home because, Belinda, if the air conditioning breaks, the heater breaks, the refrigerator breaks, if anything goes wrong, you don't have the money to fix it. You're already 1 month behind on your mortgage payment. And sure, you'll catch up, but you need to put yourself in a situation where you don't owe. We need you in a situation where you can save. You could have, after commissions to sell it, $20,000 extra. You then would have enough money to do first and last month rent. You could rent for $1,500 a month. If anything goes wrong, it's on the landlord, not you, if you don't do this. I am so afraid of where your future is going to take you that even Suze Orman is not going to be able to save you. We can save you now if you do what I have asked you to do, and if you don't, we really will be in trouble. If you follow my action plan, I promise you, you will see results.
Thank you, Susie.
Up next, you can't afford to miss. Can I afford it?
I'm graduating with my PhD this year, and I think it would be a great gift to myself for all of my hard work.
Honey, when you get out there, really, you'll now know what truly hard work is. Also,
I wanted to buy an inflatable stand-up paddleboard for $800.
I know, I should show you. Suze Orman does paddleboard.
There she goes. Look at this.
What do you want to buy?
Inflatable stand-up paddleboard.
Liposuction on my stomach.
Believe the time to believe bag.
Time for the Can I Afford It segment. This is where you call in. You tell me what it is you want to buy. I ask you a few questions. You answer, and I tell you either you are approved or denied. Are you ready? Let's go. JD, what do you want to buy?
Hi, Susie. Thanks for taking my call. I wanted to buy an inflatable stand-up paddleboard for $800.
I've seen those. Wait, I got to tell you, I've seen those. I love those. What are you going to do with it?
Well, I really want to take advantage of all the reservoirs, lakes, and the rivers around in Wyoming in the summertime where I live.
And so you want to spend $800 on an inflatable stand-up board. Yeah, so you backpack in and you want to carry it on your back with you, right?
Yes, and I also have a small car that I have to be able to fit it in.
Yeah, because even those big paddle boards, I know, I should show you. Suze Orman does paddleboard.
There she goes. Look at this.
Those big ones, they are heavy. So I always borrow one that's on the beach so I don't have to carry it, but that's besides the point. Janie, show me the money.
Okay, my take-home pay is $1,894 a month. My expenses are around $431 a month. I live rent-free and utility-free where I work. I have no debt. My savings is now about $33,000 because I just had to spend $4,000 on a new car. And I have about $270 in my 401k that I just started.
You do, and you're 28 years of age, so where does this money come from?
I'm going to pay cash for it, just with my leftover monthly take-home.
You got it approved. Approved, girlfriend. At 28 years of age, you're doing fine. Look what you have. You don't have any expenses. You're doing okay. But just remember, things can happen like it just happened with your car. Amy, what do you want to buy?
Hello, Susie. I want to get liposuction on my stomach.
Me too. Maybe 2 for 1. Maybe the 2 of us can do it. I've always wanted on my thighs. Maybe I want it on my thighs. But you want liposuction, $5,000, Amy.
I do. And I sent a picture along to show you why I think I really need it, if you wouldn't mind taking a look.
That's very funny. I get it, girlfriend. Trust me, I get it. So show me the money.
Great. I take home about $4,000 a month.
Yeah.
My expenses are about $2,754.
Yeah.
I owe $117,000 on a 30-year fixed mortgage at 4.625%.
Yeah.
I have about $93,000 in liquid savings, $19,000 in investments, and $228,000 in retirement. And
Amy,
I have no
my
debt other
dear.
than my bill.
I see you have no debt. How are you going to pay for this?
I'm paying for it out of my liquids.
You most certainly are, and you are going to have them suck it out because you have been approved. Can you do me? I'm so excited. Can you send me a picture before and after? I promise I'll just keep it so I can see it to decide should I or shouldn't I. Denise, what do you want to buy?
Hi, Susie. My husband and I would like to go on an Alaskan cruise tour for our 25th wedding anniversary, and the cost will be about $10,000.
I heard those cruises are wonderful. Are you going to go see the what's it called? Ariel Borealis? I don't even know what it's
the
called.
Northern Lights, easier
the
to say.
Northern Lights, that's the way to say it. Anyway, $10,000. Show me the money.
Okay, our take-home is $9,325, and that includes a pension.
Yep.
Our expenses are about $5,283 a month. We have no debt. We own our house. We have 148 liquid, 87,000 investments, 367,000 in retirement. I have about 75,000 in a cash account for college savings, and 25,000 in a 529 plan.
And how are you going to pay for this?
Out of my liquid.
Out of your liquid. You know, I literally took the time to project out what if you did this, if you took this out, what it would look like for you years and now. And here's the decision I came up with. You have been approved because you have enough money to do so, and especially because of the pension, you are doing just fine. Esther, what do you want to buy?
Hi, Susie. I want to get a Louis Vuitton Tivoli PM bag. I'm graduating with my PhD this year, and I think it would be a great gift to myself for all of my hard work.
You know, I've been so happy lately on the Can I Afford It segments because nobody has called up in quite a little while now, or at least that I can remember, and asked if they want to buy a Louis Vuitton bag. But here we go, Esther. You want to buy one of these because why? Of all your hard work, because you just graduated. Honey, when you get out there, really, you'll now know what truly hard work is. But anyway, that's not the point. The point is, show me the money.
Our take-home pay is $5,000 a month combined. My expenses are $2,775, and that includes $1,100 in rent. For debt, we have $35,000 in student loans deferred, $7,900 in a car loan, and $3,250 in credit card debt at 0%. And in savings, I have $12,000 liquid and $6,000 in retirement.
So denied. So denied. It's not even funny. I'm going to deny you again. I can't even believe you called into the Suze Orman Show. You have $3,200 of credit card debt. You don't have really enough in liquid savings. You have money that student loans that are in deferment. Are you kidding me? You are not going to get this bag. You aren't going to get it. You aren't going to get it. All right, no bag for her. Anyway, this part of the segment, though, I love. This is Can I Afford It Junior. This is where somebody under the age of 16 calls in. They tell me what it is that they want to buy, and I tell them if they can afford it or not. Rotani, what do you want to buy?
Hi, Susie. I want to buy a used bass clarinet for $385. I already play the regular clarinet, and I want to move up to the next level. I've wanted this for a few months now.
Do you love practicing? Do you love thinking about it?
Yes, I do.
You do. And does any part of you, as you get older, do you want to be a professional? You know, that's plays. You do. So this is your goal in life, to play clarinet, no matter what type, professionally in an orchestra. Do I have that right?
Yes, ma'am.
All right, girlfriend. How long you been watching the Suze Orman Show?
I've been watching the Suze Orman Show for 2 years with my mom.
I love that for you. So show me the money, my little Rotani. What do you got?
My take-home money is $100 a month, and that includes chores and babysitting. I have no expenses. I have no debt. And in savings, I have $65 in liquid, and I have $75 in my stock investment, and I have $20,000 in my college savings plan.
You know, it confuses me. Obviously, the money in your college savings plan, mommy, daddy, whoever it is, has been putting that money in there. You make $100 a month. You are 12 years old, but you hardly have any money in liquid or stock investments, do you?
No, I like to spend a lot.
Yeah, you like to spend a lot, and that really concerns me, Rotani. It really, really does, because how are you going to pay for this? I need $385. Where are you going to get that money?
Well, I'm going to save up for 4 months and take some money out of my liquid to buy it.
You are, and then so then you'll have nothing in liquid. Is that correct?
Yes.
All right, so here's what I think. Now, before I approve or deny, I'm going to be inviting the viewer verdict. So everybody watching me right now, if you think I should approve Rotani, tweet #approved. If you think I should deny Rotani, tweet #denied to @Suze Orman Show. And I'll be giving my final viewer verdict later in the show. Want to be part of the Can I Afford It segment? All you have to do is go to my website, SuzeOrman.com, and you will find the information that you need to know there to come and play with me right here. And if we choose you and you are on the air, you will get a t-shirt with my verdict on it for you.
Next, I tackle trending topics in Ask Suze.
If we file separately in 2014, one of us could open up a Roth, I think.
You do not ever want to be married and filed separately. Here's what you do want to do. And later, it's Suze 911, help for a money emergency.
My husband has only 1 month to change his decision to stop taking Social Security.
Why does Suze want you to pay it back? And now's the time to get your viewer verdict in for Rotani. Would you approve or deny? Tweet me @Suze Orman Show. Welcome back, everybody. Here we are in the command center of the Suze Orman Show, the control room at CNBC headquarters. This is where all the decision-making happens with all these people that are here. But here's the decision you need to make. Come on the Suze Orman Show, and there's so many ways that you can do it. Please take a look at your screen. You can send in an email. You can join me on Facebook. Or if you send in a tweet and put #AskSuze and we choose it, guess what? Your tweet will be on the air. Let's see what's trending right now. We have @Dean2136. In process of short selling my home and close to approval, will my credit take a hit even though I'm current on payments? Oh, my dear Dean, oh, you bet your credit score is going to take a hit. And not only is your credit score going to take a hit, please listen to me closely. This year, anything that you owe the bank that you weren't able to pay. So a short sale, everybody, in case you don't know, is you owe the bank maybe $200,000. You sell the house for $150,000. Now you're $50,000 short of what you owe the bank. If that is your case, Dean, whatever the difference is, you are going to owe income taxes on that amount. So you better have the amount of money to pay for it. But your short sale is going to affect your credit score. No doubt about it. Let's see what else is trending. Christina Beggs, should we close our small credit cards less than $600 if there are no balances or keep the lines of credit? Well, Christina, I'm assuming that you mean that your credit lines are less than $600, so should you keep those? If you are paying an annual fee, close it down. If you're talking about $1,000, $2,000, or $3,000 of a credit line all together, oh, close them down. You don't need them, more for you to keep track of, so it really just doesn't matter. Let's go to the Suze webcam. We have Nathan coming to us from Texas. Ask me your question.
Hi, Suze. Love the show.
Thanks, Nathan. What do you need to know tonight?
I'm married, and my wife and I filed taxes jointly. This year, we both made goals to open up Roth IRAs because you speak so highly of them.
Yeah.
But we found out our combined income exceeds the income limit to open up a Roth. If we file separately in 2014, one of us could open up a Roth, I think. But if we separately, we lose out deductions. What do you think we should do?
Here's the thing. I don't know who told you that if you file separately, one of you is going to be able to open up a Roth, because if you are married finally separately, then all you can do is make $10,000 a year each, and that's it. That's your limitation. So you do not ever want to be married and file separately. Here's what you do want to do. Please check with your accountant. You want to open up each traditional IRAs, but make them non-deductible. So now you have money in a traditional IRA, both of you, and now you can convert to a Roth because there's no income limitation to convert the money that you have in a SEP IRA, a traditional IRA, or things like that. So you just need to make sure with your CPA, because if you have other IRAs and things like that, then you possibly could be taxed on some other money and things like that. But just check it out. But that is how you get around making too much adjusted gross income to qualify for a Roth on your own. All right, everybody, we are going back to the studio, and here's what's coming up next. Need help right now? It's Susie 911.
I need help to keep the peace between three sisters when we eventually inherit my parents' estate.
Have they said it is to go in equal shares to the three daughters?
Yes.
And later, my final verdict for Rotani. You still have time to get your viewer verdict in. Tweet #approved or #denied at Suze Orman Show. Welcome back, everybody, to the Suze Orman Show. It's time for my newest segment, Suze 911, where help for your money emergency is just a phone call away. All right, everybody, let's activate the call wall categories and find out what my next caller needs immediate help with. Let's see what we got here. All right, wills and trusts. Caller, what is your name and what's your money emergency?
Hi, Susie. This is Lisa from Montana. I need help to keep the peace between three sisters when we eventually inherit my parents' estate.
Yep.
My parents are both about to turn 80, and my father is in very ill health, and my mother has also a life-threatening illness. We're looking at approximately $1.5 million in holdings, not including some real estate.
Yep.
And two of us are able to manage our money, and one sister has a lot of trouble with that. She tends to spend beyond her means. Yeah. And I am concerned about how to handle. I would prefer for her to be paid out in
So Lisa, here's the question I have to first ask you. Does your mother and father have a living revocable trust?
They do.
They do. Within the trust, have they designated how this money is to be distributed? Have they said it is to go in equal shares to the three daughters?
Yes.
And is mommy and daddy well enough to recognize that one of their daughters is not able to handle money and they are willing to change the trust so that third daughter's share goes into another trust with the two other sisters trustee for her to protect her? Are they willing to do that?
Well, my father is not well enough to comprehend that. My mother is. She is concerned about it.
Then wait, listen to me. If it is possible that your father can't do it, and if your trust has been set up correctly, where there is an incapacity clause in it, and we now, there is, I'm loving you, girlfriend, you probably got the Suze Orman Trust, but listen to me, that now what you do is you have a doctor say that he is not capable. Your mother now becomes the sole trustee of that trust, and she makes the changes to exactly what I just suggested, where the portion for the third daughter goes in on her death to a trust where either you, your other sister, or both of you, or another friend, somebody is the trustee for that, your sister's money, and they have to come all the time to that trustee before they get any money. That's how I would set it up. Thank God your mother and father were smart, and they have living revocable trusts with incapacity clauses in them. So we have another 911 call. Let's see, we're talking about retirement. Caller, what is your name and what's your money emergency?
Okay, Susie, hi. This is Najla, and I'm from Maryland. And my husband has only 1 month to change his decision to stop taking Social Security. And we're just not sure if he should do that. He started drawing at 64, which was 11 months ago. And I'm just wondering, is it really worth it for him to pay it all back and to wait till he's 66.
Are you using this money, like, did you need it when he took it at 64?
Not really.
And so if he were to pay it back and you have the money for him to pay it back, would that be a hardship for you or would it be okay?
It would be
then
fine.
Pay it back because they're allowing you to pay it back interest-free. So you got all the use of that money for approximately 1 year. Now, why does Susie want you to pay it back? Because all the time that it's growing, it's going to grow at about 4 or 5% for you. But if you can wait until 66, if you can wait till even 70, the money's going to grow at an 8% return. It's going to go up and up and up. So at this type of interest rates where you can't get anything for your money and you don't really need it, you're far better off letting it grow in Social Security than letting it just be in a money market account, really not making any income and being taxable. So if I were you, I would pay it back to get the amount that he should in 2 years. And if you have a money emergency and need my help, just go to my website, SuzieOrman.com, and hit Susie 911. My final verdict for Otani is next. Are you nervous?
Yes, ma'am.
Welcome back to the Can I Afford It? Final verdict. So earlier, 12-year-old Rotani asked me if she could afford to spend $385 to buy a used bass clarinet.
I already play the regular clarinet, and I want to move up to the next level.
So I asked you all to tweet your viewer verdict. But now it's time for my final verdict. Rotani, are you there?
Yes, ma'am.
Are you nervous?
Yes, ma'am.
Do you have an idea as to what I'm going to say?
No, ma'am.
Let's first remind everyone what you had to work with. Now, between your chores and babysitting, you make $100 a month. I think that's a lot of money because you have no expenses, no debt. But in savings, you have only $65, $75 in stock investments, $20,000 in a college savings plan, and you plan to save up for this bass clarinet for the next 4 months and then take a little cash from your savings that you have and buy it. Now, is that correct?
Yes, ma'am.
Any last words before I give you my final verdict?
No, ma'am.
All right. I'm going to give you a little bit of a strange verdict here. I'm giving you, for 4 months of saving, which would allow you to buy it, a denied. Because you cannot afford to take 100% of the amount of money that you essentially have to buy something. You need something in savings. And I don't want to see you ever spend more than 10% of what you have in savings on something. So if you were to simply leave the money in savings the next 4 months, can you do me a favor, put your $100 in your savings account, and then 4 months after that, save. In 8 months from now, you'll be able to buy the bass clarinet. You have known for a few months now that you have wanted this, but you haven't been saving for it. Do you understand why I made that decision?
Yes, ma'am.
And are you willing to stick by it?
Yes, ma'am.
Everybody watching, you're a lot like Rotani. You spend more than you have, you get yourself into a situation, and just because you have money for it, you think you can afford it. So keep watching the Suze Orman Show so that you can learn that that's not true, because there's really only one thing that matters when it comes to money, and it is always true, and it is this: people first, then money, then things. Now you stay safe. Bye-bye.